Welcome, my people. Hope you're all doing well. So today today is a bright Sunday, and we are preparing for next week. Next week is market, so I'll be taking you through. We are going to be going through a weekly forecast of the weekly what probably we expect within this coming week. As I'm recording this, it's 26th. So probably shall have a forecast from 20 of this week. That is starting from 27th. That's up to first. Yeah, so we can begin. So we shall begin with DXY, as DXY drives most of the major currencies, and it's a driver. So what we can note from that, my strategy, I mainly trade top-down analysis. I start from the higher time frame. That's the weekly time frame to see I start from the monthly to plot my key levels. Then I come down to weekly also for key levels, as well as spotting chart patterns. And so what the chart patterns do? Chart patterns provide the overall market trend, as well as weeklies also for knowing the market structure, as well as also monthly. So you can see here that what currently is happening on DXY is that DXY is currently within a specific range. And the reason why I'm using lines is because if I use rectangles or zones to cover up all the areas, that zones make my charts a bit too noisy. That's why I'm not using zones there. But these lines are able to touch multiple areas. So we can see that DXY currently on the weekly time frame is ranging. So on the weekly time frame, there's really no trend. The market is not trending, but it is ranging up and down, the up down movement. You can notice here within DXY, you can notice that the market is up here. Sorry, the market broke here up to here. It broke up to here, then it pulled back here, and then it came back here, pulled back up, then again it pulled back at the bottom. So the market is currently in a phase of consolidation. So with on the weekly time frame, my next area of target is this downer level, which is 96.378. This is my next key target on the monthly. On the weekly time frame, or my next key area of target at the support level, because the market is moving up and down. So that's a ranging market, or it's in a consolidating phase. So from there, if we can come to the daily time frame, what we see on the daily time frame, first of all, on daily time frame, we can see that we have a minor chart pattern here. All these confluences help a lot. You can see that here we have a double top. The market broke, it manipulated. The market broke, manipulated up here, manipulation up here. The same thing also applied for this other phase. The market manipulated, but in most manipulations, the market forms chart patterns. And you can see that for this case, the market was able to form a double top. So we can see that here we have a double top. We have a double top on the daily time frame. So what does that say? Since we have a double top on the daily time frame, it implies that we shall be looking for sales, as well as also this trend line has been broken. So you don't only look for change of structure because the trend line has been broken. No, find that you look for a flip in. You look for a flip in market structure. You get it? Because this trend line has been broken. Doesn't mean you should look for sales. Look for reversal chart patterns, because chart patterns reveal if the market wants to change, it will ever show a chart pattern. That's why these chart patterns are better when used on the higher time frames. So we can see that this trend line has been broken. And if I pull my Fibonacci, from the swing high to swing low, you can notice that price didn't pull back. I didn't come up to this area within the specific zone here, within the golden zone, that is 0.618, that's 61.8, and between the 50% Fibonacci retracement. So the market didn't pull back here. So either there's a possibility price could either pull back here, or it could continue down. Anything can happen with the market. So our role is to trade what we see, not what we think. So the market could do anything. Either price could pull back up to here and tap within this bullish zone and move back down, or either way, price could continue down. So our role is to trade what we see, not what we think. So from there, since we know that daily, since we know that on the higher time frame, the market is consolidating, but you also notice that within most consolidations, market can give you a specific trend within a consolidation. For this case, you can notice that we are within this range, within the weekly range. We have formed a double top, implying that we shall be looking for sales. So if I can remove that, then on the H4 time frame, we can also see. So H4 time frame and the daily time frame is mainly where we plot the minor support and resistance levels. These are probably levels where price pulls back, where price reverses from areas for spotting more entries on. So we can notice here that price has been forming lower lows and lower highs. We can see that here price from the higher high, a higher high, a higher low, and equal. This was an equal high. Then it pulled back up to here, forming a higher low, higher high, higher low, high. Then here, for this case, price broke. Probably here we're already looking for sales. Price pulled back to this area here. And this was a Fibonacci. This was a golden zone before price pushed back up. Then price changed market structure and started seeing lower low, lower high, lower low, lower high, lower low. So probably we are now looking for more sales this week. And my next area of target is this zone down here, this blue zone here. That's my next area of target. So for now, I'm bearish. I'm overall bearish on DXY. And what does that imply? That on DXY, if we're overall bearish, it implies that on other pairs such as GBP USD, Euro USD, AD USD, we are bullish. That's my anticipation for now. Then if we can go to other pairs, we can go for GBP USD. GBP USD is the same thing. As I told you, if DXY is bearish, GBP USD will be bullish because these pairs have that, they move inversely proportional. GBP USD, all the majors and DXY are inversely proportional. Yet that's their relationship. So for this case, we can notice that GBP USD on the daily, on the weekly time frame, you can see that GBP USD on the weekly time frame, it's also ranging due to price pushing back up here, down, up. So it's the same thing. If GBP USD is ranging, if DXY is ranging, GBP USD will range. But as I told you, within most ranges, there are trends within ranges. So if we can come down to the daily time frame, you can notice that within the daily time frame, price has been bullish. Within the daily time frame, overall price has been bullish. So what does that imply? It implies that price is overall bullish. So what does that imply? That implies that on GBP USD, we shall be looking for buys as well. On GBP USD, shall be looking for buys, and on DXY, shall be looking for the bearish market. Then the other confluence is this Fibonacci retracement area. That price pulled back into a Fib zone, and this is the Willis zone, or you can call it the golden zone. This is where price pulled back up to this specific area. At the same time, this was a level. I know there's a concept of market manipulation. That's that price pulled back here and manipulated. Market manipulation is where if you have a level of support, price pulls back beyond it. Probably this is mainly done by the institutional traders so as to test key levels, as well as to test certain key levels and to get the best price. So we can notice here that price pulled back up to this specific area. You notice that GBP USD has that behavior in it. Get it? Yeah, GBP USD moves like that. So what are we anticipating for GBP USD next week? Next week, I'm bullish. I'm bullish on GBP USD, implying that I'll look for sales if market can pull down, if the market probably can pull down, this market we just anticipate and we trade what we see. If market can pull down up to here, from this area, I'll be looking for buys. If market pulls back up to there, then from this specific area, I'll be looking for buys. So from this specific level here, if market can pull back up to here, and this would be the best area for buys. I'll be looking for buys up to probably this zone. Up to this 100% retracement level. So that's the level where I'll be looking for bullish or looking for buys. So next, if we can go for silver. One of the metals I also trade is silver. And now we can see that for silver, if we come to the weekly time frame, overall price on the higher time frame is bullish. But we can go there are those short-term trades you can always enter in. So you can see here that for the case of silver, price is bullish, the higher time frame or the weekly time frame. Remember, the weekly is where spot chart patterns. So you can see that here for the weekly time frame, silver is bullish. If we come over to the daily time frame is where we identify intermediate trends, as well as spot placing of minor levels. So we can see here that for the case of on the daily time frame, I can just pull down my Fibonacci retracement area and I plot it. You can see that price pulled back to the golden zone. So I'll be bullish. Price pulled back to the golden zone and price was able to break. Price broke this counter trend line. So for now, I'll probably be patient. Price probably could manipulate, as it always does. Price can manipulate, come up to here, then pull back. So I'll be looking for buys. My next area of target on silver, probably look for buys somewhere here. From a bounce of my area, my buys will be at a break of this level or the break of this minor level. That's where I'll probably be looking for buys up to the 100% retracement area, giving me a 1 to 5. So that's it for now. And that also applies for gold, because gold also has that same movement, as silver. Both of them move together. So for the case of gold, it's also the same thing. Silver and gold move together. For the case of gold, also the same thing. I'll be looking for a bullish market up to the 100% retracement level. That is, so I'm overall bullish on gold. Then for the case of S&P 500, S&P 500, you can see that S&P 500 has been bullish, overall bullish, and it's at all-time high. Weekly is at all-time high. Daily, same thing. H4, same thing. And you can notice that within H4, we have a triple bottom. You can notice that on the H4 time frame, we have a triple bottom. That is this area. This is the first area. This is the second one. Let me just get this. This is the second zone here. And this is the third. So you can notice that on S&P 500, price has formed a triple bottom. And what does that imply? A triple bottom is a continuation of the trend. What does that imply? It implies that for this week, we are overall bullish. And that is following of market structure. So I'll be bullish this week on S&P 500, but I won't just enter the market. I'll wait, I'll be patient and wait for a pullback up to this area. I'll be patient and wait for a potential pullback from the market up to this specific area here. Then from here, I'll probably look for buys. Targeting, one of the things with ranging markets is that once you see a ranging market, the same amount of pips that price has moved within the range, the same amount of pips price is likely to move once it breaks a specific area. So if I can plot this from here, so probably at the break of this range, price is likely to move. So implying that on my next key area of target is at this level here on my next key area of target, my next key area of target on S&P, on the S&P 500 is this specific area here. So I'll be targeting this level on S&P 500. I'll be looking for buys on it once it pulls back. One of the things you need to know the market is that you shouldn't rush, but you have to wait for pull back up to this area. And after that specific pullback, you can then go in for buys. That will be somewhere here. Probably we may sell somewhere here. And my next area of target will be here. So that's it for S&P. So S&P also moves together with Nasdaq. That's the advantage of trading pairs that move together. That's the uniqueness. You can also see that on the weekly time frame, S&P, Nasdaq is bullish. On daily time frame, Nasdaq is bullish. On H4, it's bullish. And what does that imply? It implies that for now, I'll also probably wait. I'll patiently wait for a pullback up to this level. Then from here, I will look for buys. Yeah. So all you need to have is to be patient and wait for the market to follow, or wait to follow what the market is showing you. Don't trade what you see and wait for the market to come to you, not you to force it. That's one of the other key things with trading. Yeah. So this is my analysis for the week, and this is what I anticipate. My next area of target on S&P 500. That my next area of target will be somewhere here. I can come down here. My next area of target will be somewhere here. Yeah, this will be my next area of target as price has been within this range. So we are using all those other confluences. So price has been within the range. So my next area of target on S&P 500 is up. It's at this specific area, which is a 1, 2, 4. Yeah, so that's my analysis for the week. Let's get ready, get prepared. This is just my analysis. This is not financial knowledge, or this is not, the market can do anything. The market can really do anything. So you need to be careful. And this is we're just forecasting. We may look for buys and price sells. Get it? So we just follow what the market shows us. We don't trade what we want the market to. We don't trade what we want the market to do, but trade what we see. Yeah, so this is my forecast for this week. So have a great time, and thanks very much for listening. Hope we meet again.